Pete Wargent, Wargy, as I call you. Fantastic to see you again. I know you've been out of the country for a while, and obviously I've got you in for a chat for all my subscribers so that we can get an update really on what's going out there, because I think there's multiple mixed signals in the market at the moment about, not only where housing might go, but also I think a lot of people are very worried about their investments and what is best to do over the course of the year. We've got record immigration coming in. We've got desperately low supply still in the rental market. We've still got some fears going on over inflation, even so that's coming down. But there's other concerning things that are going on in regarding to building companies going into administration. Obviously, businesses are suffering as well. Give me, first of all, your overall take on it. What are you seeing out there? Give us a general overview of the economy.
Yeah, so I guess the biggest issue in the economy in Australia at the moment is immigration running at the highest level we've ever seen practically. So population growth has hit 2,000 people per day at the moment. And of course, for housing demand, it's a monster amount of demand for housing that's coming through, and we can't build for that pace of population growth. So that's obviously a net positive for the housing market. Pulling the other way, as you mentioned, inflation and interest rates. I think if you look at what's happened over the past month or two since we last spoke, I think increasingly people are feeling that we're at the top of the interest rate cycle. However, oil prices are nudging back up towards $100 a barrel. Anyone who's driven around the country, as I have been for the past couple of weeks, would have seen the fuel prices creeping higher again. So it may well be that even if we are at the peak of the interest rate cycle, we'll be stuck at a higher level for longer. Previously, people were expecting a salvo of interest rate cuts in 2024. Well, that's kind of been pushed out, that expectation. And that's largely because oil prices have come back up, and that has a knock-on effect to production and the price of fuel at the bowser and all these other kind of things. So, so I guess on the optimistic side for housing, possibly out or very close to the peak of the interest rate cycle. However, if you look at what's happened to bond yields over the last few weeks, creeping back up, and that suggests we'll probably be stuck at this plateau or somewhere close to it for quite some time, and possibly all of next year.
It's I've been doing a fair bit of driving myself over the last few days. I drove to the Grampians, which is about a 3-hour drive, and got a little bit stung with the cost of fuel going down there. But I actually haven't been expecting any interest rate cuts. I know people are posturing that might happen. I know that the Cook has said a few things about, that we might have a cut in interest rates, and I know some of the economists from the majors have come out and said that could be on the cards. But I honestly don't think, in terms of my own knowledge, in terms of how the land cycle goes, that it's something that we should be expecting or should be planning for, despite the other indications that we're seeing. Is that your kind of general feel of it as well? If you were forced to make a forecast out from this point onwards, would you say that we're generally looking at things to remain on pause, or could there be cuts or another rise?
Yeah, look, if the shit hits the fan, you could always see interest rates being cut. But at the moment, even on the monthly inflation indicator, it's still at 4.9%. So yes, it's coming back down, but still well above 2 to 3% target. So absent a real crash in the economy, you should expect interest rates to, at the very least, be on hold for quite some time. Yes, and I think, as you said, I mean, the fuel price has an outsized impact on inflation expectations, because when you're driving around the country, as you mentioned, it's the biggest number you see, as you go past all the service stations. I've just driven down from I've come down through Port Macquarie, Newcastle, down to Sydney, and as you said, you really notice that $100 doesn't go very far in the fuel tanks these days. So so I think, and a lot of countries are finding this, they've got inflation down to 3 to 4%, but now it's creeping back up again on the annual measures anyway. If you look at Canada, US has had the same thing. So just that final part of the battle for inflation is still to go. And there's still plenty of countries like the United Kingdom where there's a long way to go yet until inflation's back to target. So, and by and large, the economy is holding up pretty well, all things considered. I do think the dynamics changed a lot, though. If you go back to 18 months or so ago, and the stimulus checks were still flying, if you save some money or lose some money on the fuel price, household saving rate was nearly 25% back then. And so people were just carrying on spending. But now household savings rates in real time. Well, they're practically back down to zero. So if fuel prices go up, that will probably just dampen consumption. So I think the Reserve Bank is winning the battle against inflation, but they're not going to capitulate and start dropping interest rates unless they really have to.
Yeah, people need to plan for that, I think. Let's have a little bit of a chat about what's going on in the housing market, and the dynamics that I'm seeing on the ground. And you do a lot more traveling than I do. You do more traveling than anybody I know, Pete. So
for the footprint, I suppose. But yeah, I'm a restless individual, as you know. So I do like to get around. It's been good actually to get out to some of the regions this past week or two. I think often people have a very capital city centric view of what's going on in Australia, but certainly getting out to some of the coastal towns. It's interesting to hear people's viewpoints, not always aligning with what you might see in inner city Melbourne, shall we say. So pretty interesting. Yeah.
Yeah, I think that's one of the things that I've always felt, no matter how much I love doing the job that I do now, which is, writing, publishing, talking about the economy, it's really important for me to keep my feet on the ground working in the property market, because that's where you see what's happening and you get kind of like more of a realistic idea rather than just looking at the stats that come through. And it's a real, for me, from where I'm sitting, like it's a real mixed bag in the market. There's some properties that are doing extremely well and you'd say, okay, things are inching upwards. There's a lot of demand out there. There's things that are flying. I was at an auction at this past weekend, a very nice warehouse apartment. So it was a unique property, but it flew over 200,000 above reserve. Whereas there's other properties that I'm dealing with at the moment that were purchased in 2018, and they're pretty much development sites. So they're like an old knockdown house in a suburban block. And even though that they had inflation over like the COVID period, everything was getting inflation around that time because those holders didn't sell at the peak, and they're now trying to sell now after we've had this strong pullback in 2022. There's no developers in the market. They can't turn over the properties, and they're struggling to even get a profit on what they paid in 2018. So it's a real mixed bag on the ground in Melbourne. And I think kind of the clearance rate softening a little bit from where they started to go at the beginning of the year is indicating that, we're in a bit of a plateau of a market in Melbourne. It's not necessarily roaring ahead, despite immigration coming in and despite people wanting to get out the rental market, and despite maybe there being a little bit of leniency in the serviceability buffers for people that are refinancing, which is stopping a flood of property coming onto the market. But yeah, it's not really sort of easing. Why don't you give me a rundown of what you're seeing in the rest of the country, New South Wales, in Brisbane?
Well, it's more or less exactly what you just said. So in Brisbane, we're getting smashed. We just can't seem to get properties bought as buyers agents. We've got basically running at full capacity now. We can't take on any more clients because we're just struggling to get quality properties bought. So yeah, as you mentioned, we went to an auction last weekend, suburb Wilston in Brisbane, which I think has had the highest capital growth over 25 years in Brisbane, highly sought after blue chip area, good schools, close to the city, that kind of thing. And we priced the property as we thought appropriate, and we still got completely blown out of the water. There were 10 registered bidders, went a couple of 100,000 over even where we thought the top end of the range was. So there's definitely a real shortage of supply for good family homes in good school zones. And yeah, I think it was Leith Van Onselen said it's like the Hunger Games in Brisbane at times, trying to buy those types of property. But yes, as you said, that's only one part of the market. For development sites, it's a different story. And certainly in parts of regional Australia, those interest rate hikes, we've seen the fastest tightening cycle in a generation. And that's starting to really bite now. We've certainly seen that plenty of regional cities around the country. Where I'm based at Noosa, we're seeing that, properties being listed, as you said, with high expectations of yesteryear and just no interest. So prices having to be dropped back. And I don't think that's a bad thing necessarily. Prices really overshot in a lot of those lifestyle markets. Yeah, it's a mixed bag. I think, yes, the rental shortage hasn't really, we haven't sort of seen anything that's going to change that dynamic over the next few years. We've just got more and more people coming into the country. First home buyers getting trapped in the rental pool because they can't get a mortgage or they can't afford to buy under the current lending rules. A lot of investors are actually getting out of the market because it's just not stacking up for them the same way it did. So there's a lot of people looking to rent, and most new arrivals, of course, are renters into the country. So a combination of all those things, the rental shortage Well, PropTrack now has the rental vacancy rate, the lowest they've ever recorded, around about 1%. Now, the growth in rents might be plateauing out because of affordability. And I think CoreLogic said partly because rents tend to reflect the trend in interest rates. So we may well see rents flattening out, but actually trying to find a good property to rent is still pretty tough. So, yes, there's a lot of sort of competing dynamics. I think the big issue that's going to become possibly even an election issue over the next year or two is immigration. I think the coalition is going to juxtapose itself against the high immigration policy that Labour is running, and they're going to advocate for a slowdown in immigration because infrastructure is struggling, housing construction just can't keep up, and the rental market's a quagmire. So yeah, that will definitely be something to watch over the next year or two.
Yeah, and as you say, like the rate hikes, it takes time for those reactions to the rate hike to come into the economy, and you to see what the fallout from that is going to be. And I heard you discussing on a podcast the other day with Chris Bates about businesses, a lot of insolvencies in businesses. Fill us in on that. I mean, people are really struggling, aren't they, at the moment?
Yeah, so we went through a period of time where there was effectively a moratorium on businesses going insolvent through the pandemic, but now we're playing catch up. In particular, in building, construction, and development, that's one of the sectors that's getting really hit. But yes, insolvencies are now the highest we've seen since the global financial crisis, and there's things like transport, logistics, postage, warehousing, particularly construction and building. That's there's been a huge increase in the number of insolvencies and businesses going into receivership there. So, yeah, I mean, that's a factor, combination of things. It's the interest rates going up, slowdown in the economy, and probably a bit of catch up as well, because we had 2 or 3 years where there wasn't much happening from an insolvency perspective. Things were almost on hold or on pause for a while. So, yeah, that points to a rise in unemployment ahead. Unemployment's still very low, of course, but eventually it will start to creep back up towards 4.5%, which is probably a more normal sort of a level for the Aussie economy. So, yeah, definitely some pressures out there. And there's a lot of pressure on households too, particularly mortgaged households. I've seen their repayments jump up. And as you said, it does take time for all this to flow through. We're probably only about halfway through all of those fixed rate mortgages resetting from, say 2% to 5 or 6%. We've gone through about half of that, but there's still probably another 6 months or so of that pain to come. So even though the cash rate target might stay flat, there's still a lot of tightening to come in the system, and that's just going to depress consumption and just slow down the economy.
Absolutely. And you would think that the sensible policy response in all of this to give some ease in the economy would be to cut back on immigration and to put the concentration as to how we can get more affordable properties into the market. And unfortunately, we have a government that doesn't seem to understand how best to navigate that. So these circumstances that we see now are the circumstances that are going to carry us through at least the next 12 months, next 1 or 2 years. And that's going to put obviously a lot of strain on people that are either in the rental market or in the property market. I actually do think, sort of reading ahead, that there's still a really good chance that we could see. I don't expect the property market to start sliding backwards. And I say this not only from a fundamental perspective as to looking at the data, but also taking into account the cycle work that I do. I mean, I really very strongly feel that we're going to push forward to a peak, which is going to occur around 2026, because that's just based on, looking back on history and seeing how this cycle generally works. The drivers that I would see to that is the constant immigration that's coming in, that's pushing on a market that is very short on supply, and we can't see any ease to that. We don't see money that people are bringing into the country, do we? You obviously see what's happening here on the ground, but we're not sure of what's happening that's coming in. And there's been quite a few transactions that I've been dealing with lately of very, very wealthy people that have come in from overseas and have a lot of money and are pouring that into the property market, not on just buying one property, but on buying multiple properties. And one of those trends, interestingly enough, is purchasing into rooming houses. So that's properties that are on that might might look like a good investment from the outside, and they are, because they're suburban houses that are on full subdividable blocks of land in suburbs that are landlocked, so suburbs that are desirable to families, where you cannot increase the population by building more accommodation unless you subdivide the land. So you see that development cycle kind of kicking in from the smaller developers that can afford to subdivide. But these rooming houses are houses where students do not have enough accommodation. Students that are coming into Melbourne, they don't have enough accommodation. There's not, so they're taking this option, and they're bringing in incredible yields, like close to 10% in some circumstances. So those are all the sort of drivers that I see looking forward and saying, well, okay, yeah, if you need to turn over a property into cash and you've got something that's really only going to appeal to a developer, then you've got one buyer demographic out there. They're not hot in the market. You're going to make a loss. But overall, there's a lot of other property that is attracting investment, that is attracting money that may be coming in from overseas, that is, and the people that can borrow and they can get into the market. And so in my mind, that still gives us a lot of potential for upward growth in land values over the next 12 months to 2 years. What's your take on that?
Yeah, I mean, this is one of my more sort of contrarian viewpoints, and that is, I think actually, particularly unit and apartment prices. In Brisbane, they're already teeing off, but probably in Sydney and Melbourne, I can easily see them rising 30%. I think the return of international students, the return of visitor visas. We've got 2.5 million people on temporary visas now, the most we've ever seen in Australia. Permanent migration is ramping up, particularly from India, China, Asia, and that's starting to sort of ramp up again. And so the pathways for non-residents bringing money into the country, those have all reopened. But I think this is a very different cycle from what we saw, if you think back to 2015, 16, 17, when a lot of the investment from mainland China was going into new build apartments. So we're seeing apartments going up all over the place, particularly inner city Melbourne, all across Sydney and inner city Brisbane. This time around, though, we've got stamp duty surcharges in place that have really discouraged foreign investment into the sector. And most Aussies don't really buy new apartments. So the apartment shortage is now getting worse by the day. We've got the cost of construction and development for medium density dwellings is up about 50% since the end of 2019. Largely due to materials and trade shortages through the home builder package and the border closures. And so the supply is there's just no way it's going to keep pace. New housing starts are now the lowest level we've seen in a decade. They fell 23% over the last quarter, according to the Housing Industry Association. So we're just going to see such a chronic shortage of units and apartments over the next 2 or 3 years. Now, eventually, things will right themselves. Usually rising prices does bring new supply, but there tends to be a lag with the medium density stock. It takes 2 to 3 years to bring a lot of that stuff online. So I think prices will rise, and eventually that will drive the supply response, but that's probably 2 or 3 years away yet. So yeah, I agree. There's definitely potential. And in fact, if you pull all that together, it does point towards, as you've predicted for many years, actually a peak in the cycle around 2026, which makes it looks like it's lining up. The stars are aligning perfectly for that.
Yeah, absolutely. And I guess the only market to me that kind of stands apart to some extent is what's going on in WA, because we can't take WA as just a normal residential market where, people move into the area. It's not really a diversified economy. It's a very small town, which is, runs on mining investment. And we have a lot of mining investment going on there at the moment. And, I do purchasing in WA now and again. I don't do a lot of it there. I do have some clients there that I purchase for. And it's always been a pretty difficult market to get into. In fact, I did a purchase there recently for a client, and we have to move really quickly on the properties if we want to get them. And this is really from home buyers as well. Like, it's a strong home buyer market. I mean, they've had population growth. They've got a very strong mining industry. They have lower gas prices than anywhere else in the country. You know, that exposure to overseas and to Asia and to what's happening globally. I mean, I think this is the other aspect of the cycle is, you know, we're such a small little place in Australia. You know, we think it's really big when we're here, but you do traveling more so than anyone else. And, you know, Australia is kind of like out of the radar of most people. We're just sort of a remote, small population, and they don't really think about it too much. But globally, what's going on actually is pretty huge construction cycle, because we have what's going on in China, which is the Belt and Road project, which is crossing continents. So there is a lot of infrastructure investment, and therefore a lot of demand for the minerals that you know, are needed to build that infrastructure, as well as the new technology boom, you know, for electric vehicles, and, you know, countries that are now outlawing gas guzzling cars but wanting to change over to electric vehicles. So I kind of feel that WA, if there's anywhere that's going to defy any downturn that may come, you know, after that peak in 2026, or the housing market that might push a little bit further, you know, out of that, I sort of think, well, WA kind of stands a good chance of it, because it's a different economy from anywhere else. And I don't know whether you've traveled there recently, or whether it's on your tour that you're doing, your tour around Australia, where you've got, yeah.
I haven't been there recently, but I 100% agree with what you're saying. So if you think back 4 or 5 years ago, Hobart was the cheapest capital city in the country. The Aussie dollar fell, the exporting economy picked up. There was a lot of interest from Chinese buyers. You know, they enjoyed the cooler climate and the fresh food, and, you know, the logging industry was reviving. And yeah, I mean, and suddenly prices went bananas. Now, the most affordable capital city in Australia now is Perth. And yes, it's a very cyclical economy, as you said, sort of resources cycle drives that. And yes, the market's kind of went through a huge boom through the early phases of the mining boom, sort of, I guess, 2003, 4, 5, all the way through. And then I guess from around 2012, when the resources investment boom peaked, I mean, it's had a really sluggish decade since then. But look at the fundamentals today. Population growth can have an outsized impact in the smaller markets, because there's less liquidity, as you said, and a smaller change in demand can actually drive prices around much more quickly. We saw that in Hobart for sure. So if you look at the latest ABS figures, population growth for Western Australia plus 78,300, that's 2.8% at the state level. That's a massive rate of change. So this is getting back towards the sort of go-go years when the population growth in WA was 3.5%. We're not far off that. The construction cycle, yes, is different. There was a massive overhang of properties 10 years ago, but that's all been absorbed now. Vacancy rates are extremely tight for the rental market. So anyone who can afford to buy wants to buy. We've got investors coming across. So looking at the most affordable city, nothing on the market. So the fundamentals are very, very strong for Western Australia. Always a hard market to predict, as you said, because it kind of stands alone a little bit. But if anywhere is going to really defy what's going on elsewhere in the country, it would probably be Perth and WA. So yeah, I mean, we're more or less aligned on everything so far. We'll have to find something to disagree on, Catherine.
Yeah, I know. We'll work on that when you come
Politics, maybe.
Because I mean, that historically WA has done that. I mean, in the 1890s, where, you know, the East Coast was crashing from the gold boom, you know, in WA, it was like the market started to boom there because they were sort of finding gold and you know, so I mean, it's kind of always gone counter to the cycle that I forecast. It, you know, it runs with the commodity cycle more so than the land cycle.
Yeah, and same actually through the mining boom, right? So 2003 to 2012, Perth and Darwin were absolutely going gangbusters. I worked in the mining industry for a while, I even lived in Darwin. You know, it kind of underscores everything when, you know, the industry is sucking in people like myself as young professionals, as I was back then. But yes, as you said, those markets were going gangbusters. Sydney and Melbourne were actually pretty slow. I think the market was declining 2011, early 2012, and only then did it shift back towards the services economy. So yeah, Australia a little bit different to some other countries where things the markets tend to sort of move coterminously or in the same cycles. The mining or resources states and territories can operate somewhat counter-cyclically to the rest of the country. So yes, we might well see that now. There's a lot of investment going on in WA, massive population growth and not enough housing stock. And it's a great city as well. That's the other thing, really good climate, great lifestyle, a little bit isolated, but direct flights to London as well. So it's got a lot going for it too as a place to live.
Yeah, it's interesting you say that, because that was going to be my next comment, because a really good friend of mine moved there during, actually just before the pandemic hit. He went for a holiday there, and then the pandemic hit and the borders, he said, the borders won't shut. He really didn't believe that would happen. And then they did, and he got trapped there. So he gave up his apartment here, basically gave away all his furniture and stayed over there. He came back recently for a visit, and he was kind of quite shocked at how Melbourne had changed when he came back. It's like, I'm not going to come back. He sort of made that decision there because, I think that the pandemic, it was, we all know this, obviously it was a huge, caused huge changes at that time, but those changes I feel are a little bit ongoing as to people's decisions about where they want to live in the future. I still have investors that say to me now, I've got one investor that I'm buying, again, it's actually a rooming house for, and he's saying to me, I want to know what happened to it during the pandemic, because I think that could happen again. People have it in their memory of something like that could happen again. And then the other trend that's happening out of that is, I have a lot of clients, they want to move to a regional area in WA, buy a landed estate, make it as self-sufficient as possible, with solar power and whatever else that is going to enable them to live a little bit off the grid, take their family there and live as a family unit as far away from government as possible. There is still, and I don't know whether this kind of penetrates through the mainstream news enough, but there's still a huge distrust about government and what might happen. And if it hasn't got to do with another pandemic coming, then there has a lot to do with climate change, which is the forefront of the argument now, along with the idea that travel is bad. I mean, you said it yourself like a few minutes ago. Yeah, I'm not doing very good for my carbon footprint, because you're getting barraged all the time through the media of sort of saying, well, you shouldn't be traveling, because it's increasing, the problems that we've got with climate change. And so there's these kind of things of, what are we going to be required to do next that is going to control our lives or control our freedom? And I think that in itself is causing these kind of like subtle underlying structures in the property market. Have you got any thoughts on that yourself?
Yeah, completely. So even one of the major banks, the one that I bank with, won't mention the name, but they actually started on my transaction account, sort of tracking my carbon points or carbon credits or whatever it was. Nothing that I'd requested, but obviously there's a push in that general direction. I'm just staying at the Sir Stamford here on Circular Quay, and if you look down onto George Street, well, it's pretty much all pedestrianised now, and that's the way the world is moving towards the pedestrian-free cities and the 15-minute zones and all this kind of thing. Now, we can debate the pros and cons of that and the mass surveillance and all the restrictions on movement, but that's the general direction things are going in. I think there's definitely a recency bias thing that goes on, not just in financial markets, but just in the world in general. Years ago, I used to do some work with disaster recovery charity, and they said, that, for example, when they do a tsunami cleanup, the charity raises money to provide funding for escape zones. And you can say to people, look, tsunami might only happen once every 100 years. Well, people just don't care. They've said, we've seen it with our own eyes, and therefore, if it's happened once, it can happen again. And people, and quite understandably, if we've just had a pandemic where the borders have closed, there's been restrictions on movement, well, people are like, well, this could easily happen again. You look on, Bill Gates talks about, the next pandemic, so it would actually change the way people think. There's definitely been a regional shift as we've seen over the past 2 or 3 years. Met lots of people up in Port Macquarie this week who are former Sydney siders and no interest in going back to the city. They're like having the space and the quieter life and a bit more freedom, and they can still pop into the city if they want to, go and see a show or the opera. Always used to be one of those debates, didn't it? Like people would say they're moving to the regions, and then the city slickers like myself would say, but what if you you know, what if you want to go and see the opera? And of course, like the retort would be, well, when was the last time you actually went to, you know, like,
Yeah, I mean,
yeah.
I think definitely the way that people value real estate has fundamentally changed, because there's no longer the same emphasis put on you going to the theatre or going to the cinema, or going to see a show. And a lot of that is because we have become used to now living online, and that's the way the trend is going. So if you can see something, it's nice to go and visit those places, but it doesn't kind of have the same pull anymore as perhaps the big natural the big nature things that make real estate valuable, where people are sort of moving. And I think that what you said is really valuable, because it's the way that we have to think about it, I think, from an investment perspective. And of course, this is the audience that we're talking to. Whilst it's all interesting theoretically, and whilst we can get really upset about it and the control that's being put on our lives, and we don't have much say about it, and is it true or isn't it true, regarding climate change and what's going to happen, it really is the fact that the trend is there, and the trend is moving in that direction, and there's nothing that you can do to change it. So to some extent, you have to see through the fog and work out where the opportunities are going to be. And I guess that's where I think this conversation kind of needs to go now, because we can look at it from a residential perspective in terms of real estate. I mean, certainly, there's still strong demand from where I am for people that want to live in a metropolitan area, mainly for access to roads and, quick access to the airport, quick access into the city, quick access to the bay. But what about the commercial sector? Because the office vacancies, they're still really high. There's still problems within commercial buildings, and there's still devaluations going on high-rise office buildings. There's a lot of talk about converting those buildings to residential, but I can tell you now, that is not an easy task. That's a major, huge investment to do that, to convert an office building into a residential building. I don't know whether that type of thing will ever catch on. And then are we really going to have enough demand for apartments in the city to fill those residential blocks up? In Melbourne Central at the moment, the vacancy rates are 3%. If you really want accommodation, go into the centre of Melbourne and get yourself an apartment. The problem is that the people that need the accommodation are families, and they're not about to go and live in a 1 or a 2 bedroom apartment. So arguably, we've continually got an oversupply of apartments. It's not where the money should be going to increasing property. So what's going on from your perspective in the commercial sector? Because that's where the REITs and everything, that's where the exposure is. If people want to go, they either want to go to buy, or if they're going to expose themselves to the property market, it's going to be on the stock market, and the first port of call is going to be a REIT.
Yeah, so this is actually very timely. So only earlier today, I was up in Newcastle, and we were just talking, as you do, about repurposing of vacant office space into apartments. It just doesn't really happen that much. I think modern building requirements, but also modern expectations of what an apartment should provide in terms of facilities and amenities and layout, it's actually pretty hard to repurpose an old office into an apartment. So quite often you're more likely to see a knockdown and rebuild than you are to see a repurposing. Now, yeah, very timely, because the Reserve Bank actually put out its September bulletin today on the day of recording. And one of the areas they were looking at was financial stability risks arising from changes in commercial asset valuations. Now, in Australia, the figures always lag. So that is somewhat unhelpful when you're going through a rebound or recovery. But if you look at office attendance compared to the pre-pandemic level, well, Melbourne is under 50%. So office attendance is more than halved. Now, these figures only go to February, and presumably over the past 7 months, they would have recovered somewhat. But clearly, there's not as many people in the office as would have been the case in 2019. In Sydney, we're back to about 2/3 of where things were pre-pandemic. In Europe, it's above 3/4, though. So the recovery's been stronger in other parts of the world, interestingly. And I wonder that's partly just because Australia's lockdowns went on for longer and it's taking longer to recover. So that's definitely one big shift. Office vacancy rates, as you mentioned, are around 15% in Australia. So that's the highest we've seen since all the way back in the early 1990s recession. So even in the GFC, we've got nothing like this. So that's a fundamental change. I guess in terms of, you mentioned valuations, well, office rents for Australia are only down about 10%. And if anything, they seem to be on the rise again. which is kind of counterintuitive. Maybe just a function of record immigration and a bit of inflation in the economy. But if you look at other parts of the world, most notably Hong Kong, office rents have absolutely got annihilated. So that is one sort of cautionary tale. Obviously, Hong Kong has got political issues as well that's driving that big exodus and a brain drain. Commercial office valuations in Australia are only really down about 10% from the peak, or commercial real estate valuations. And again, much harder hit in the US and Europe. So there's still potentially some downside risk there. And it is, I guess, as you said, real estate investment trusts, or REITs as they call them, probably down about 20% since the end of 2021. So yeah, look, there's a lot happening there. Whether or not we'll ever get back to the same level of office attendance, it seems pretty dubious now. It's gone on for a long time. This hybrid model where people work some of the time in the office and some of the time from home. I think from a financial stability point of view, well, Australia's bank loan exposures to commercial real estate are way down, on the list, and it's certainly nothing like the exposure or risk we saw in the early 1990s. So we should pull through, I guess, but there's definitely some fallout to happen in terms of valuations. And as you said, there's just been a fundamental shift in the way that people live. We're not 5 days in the office anymore, and some people are never in the office. So that's definitely a change. And it doesn't look like it's going back to how things were before.
Yeah, I mean, in the 1990s, when that crash happened, it was people look at the residential market and they say, oh, we didn't have a real estate crash because the resi market, the median price, I think, only dropped around 10%. At the time, individual property prices, it kind of masks what happened to individual property prices. And if you look back at sales data and you look at individual properties and what they were selling for in 1989 at the peak, and then what they were selling for in 1995, some of those values had halved. So you'd see them sell for around 800,000 and then resell for 400,000 at the bottom of the market. So it actually was more severe in Melbourne on residential property than perhaps the data shows, but the commercial market was absolutely trashed. And, real values fell, real median values fell like 50, 60%. It was a major problem through that period, and part of the reason why that downturn lasted for as long as it did, because it was a few years before we saw the property market start to recover. Very bad time for Melbourne. There were strikes in the city, and if you talk to people that were around here at that time, which I wasn't, but that it was hard to get work. The cafes all shut down. It was like a ghost town. So it's kind of good to hear that we haven't kind of got that same exposure to that sector anymore. But where are the opportunities in the commercial sector? Because we saw that there were a lot of opportunities with industrial land. That was happening in Sydney, in Western Sydney, like over the years through up to the pandemic, and through the pandemic there was a big sort of boom in industrial real estate. Are you kind of sensing that opportunities still kind of exist in that sector, maybe like in storage and warehouses, that type of commercial real estate?
Yeah, industrial units. I think it's a bit more of a niche asset class, and you've got to pick and choose and understand the market, and in particular, understand your tenant. And if you can buy an industrial unit with more than one tenant, that might help to diversify the risk a little bit. You need to understand the lease terms. But if you look at some of the peri-urban locations, places like the Sunshine Coast or Newcastle, places like that, I mean, there's some good opportunities there. You can still get net rental yield 6 to 8%. You can find a tenant with maybe a 5-year lease locked in with inflation linked. There's definitely opportunities there, but it's a bit different from the housing market, which is intuitively much easier to understand. You do need to be across the risks. In particular, you need to sort of do your due diligence and see off things like the vacancy risk, which can be higher in that type of property and that type of asset class. So yeah, there's definitely still opportunities there, particularly for people who want to get a higher return. I think it's been harder for people who are borrowing sort of 80, 90% to make the residential yield stack up at the moment. If you're borrowing, say, 6% mortgage rate. So a lot of people are looking at commercial. The retail sector tends to be a bit more fickle. Unless you're an expert in the field, that's probably one to leave to the experts. I guess it can be, definitely a more sort of, a fickle market. Trends can change in retail, as we saw in Sydney when the big Westfields came in, and the strip through Paddington, which was the the retail hotspot suddenly was a not spot, and lots of vacancies there and rents falling. So yeah, retail is one probably to lead to the experts, and obviously the office space is where the big risks are at the moment. Massive change, a structural change happening in the office space. I suppose if you're being a contrarian, you might find some of those real estate trusts, you might be able to pick them up at a discount over the next year or two. But as you said, it's slightly different from the early 90s recession when we had very high interest rates and just complete chaos in some of those markets. It hasn't been quite so dramatic this time around, at least so far.
Yeah, at least so far. I mean, I sort of feel that over, as we kind of get to the peaky point of the cycle, you might see a couple more interest rate rises, that kind of flow through. It's very difficult to kind of see out from this point, but cyclically, that's kind of what happens at the end of the cycle, is that the interest rates do finally break the market because they're put up to stop the boom that's happening in the property market. And then, of course, you see that the productive sectors of the economy, they just can't service the debt because the cracks are already happening in the economy, as we're talking about. I mean, insolvencies and businesses struggling and people cutting back because of, fuel costs are going higher and they're not able to do the things that they were able to do before. And so, the business is going bust. Obviously, that means unemployment. So all of those kind of structural things happening. And then you've got rise in homelessness. But the market kind of keeps going, and it's going at the moment on this kind of population Ponzi that's coming in. And record low rent vacancy rates. So we've kind of got those two dynamics at play, and at some point something's got to give. And when something gives, it's going to give quite hard. It's got the potential to give quite hard. And you talk about supply taking a while to come onto the market and ease that, but once supply comes onto the market to ease it, and you see a drop in land values and a drop in property prices, that's where things start to get sticky because of the debt that's been taken out on it. And suddenly people find themselves underwater, or, we're potentially facing a financial crisis. I mean, that really is the feature of the cycle of what you would expect sort of going into a downturn into 2028, which is what we're forecasting here. But yeah, I mean, between now and that period, there is money to be made because we are potentially looking at a boom that's going to flow through the property market. And I also feel that there's going to be some opportunities on the REITs, but as we've discussed here, you've really got to take a look at what they're made up of and where those investments are going. You need to do a lot of analysis on that and sort of use your knowledge of what's actually happening foundationally to see whether that's going to be a good opportunity. I guess the final thing that I always like to ask you, and this is because you're a traveller, and I can't wait for you to come to Melbourne again so that we can hang out. It's great when you come into town, and so we get the opportunity to do that. I know Melbourne isn't your necessarily favourite place.
Grand final weekend coming up though, Catherine. So the kids are absolutely desperate to see Brisbane make the grand final day. So fingers crossed they can beat Carlton on the weekend. But yeah, it's going to be.
You're going to tell them that you're coming to see me instead. You're going to say, "Sorry, kids. Are we going to go and hang out with Catherine rather than watch?"
Well, let's see. Depends if it's a Collingwood final against Carlton, it might be a different story. But yeah, no, it's I always enjoy having a week down in Melbourne. It's always interesting just to see how quickly it changes. Every time you come in, it just seems to be bigger and busier. Yeah, be really looking forward to it. Anyway, I rudely interrupted your penultimate question. So yeah, please fire away.
You do so much traveling, and I mean, look, I come from a family of travelers. My sister's an air stewardess, and my family have always traveled. I've got a family of pilots basically, so they've always done a lot of traveling and flying around.
Shout out to Lisa.
I got myself caught in Australia. It wasn't like that always, but now I seem to have landed here in Australia and got myself stuck on the ground, working on the ground. But yeah, I mean, I feel that traveling kind of gives you the best lesson in the world and the best perspective of what is going on globally. And I feel that we tend to become very insular in Australia with what's happening here, because geographically we are so divorced from a lot of the world, apart from here and what's going on in Asia and our immediate sort of surrounds. So I guess I'm kind of interested in any interesting things that you might have seen. You've been in England, obviously visiting family and everything, but you do a fair bit of kind of hopping around sort of in between that. What's the housing market like in England? I mean, is that obviously very tight rental market there as well? Are we seeing, is it a hot market? Is it a slow market? What's going on?
Oh, it's freezing up. So yes, going back to your preceding point, it used to be said that the central banks will keep hiking until something breaks. Well, the Federal Reserve's at 5.5% now. The Bank of England's at 5%. They're expecting another hike this month, so that'll be 5.25%. I mean, these are eye-watering levels after the best part of a decade and a half at zero for the Bank of England. So that's suddenly that is really breaking the housing market. Now the rental market is very tight, as you said. International students have come back in their hundreds of thousands, which obviously has an impact on the rental market. But yeah, we're now starting to see prices falling in the UK. So we haven't seen that actually for quite a long time. But yes, a 5% Bank of England base rate will do that. So it does look, actually, the latest inflation figures are very promising, and they're way under expectations, actually. So I guess the optimistic view would be that we saw this enormous spike in inflation up to 11% in the UK, but now it's falling just as fast as it went up. So, and look, maybe central banks are actually overcorrecting now by tightening too much. And as the supply comes back online, inflation will fall to zero. Who knows? It might go below zero in a year or two. So yeah, look, there's changes. Yeah, well, I think Europe's a bit further on in the recovery because the lockdowns happened earlier, but then they finished earlier. And as mentioned, people are back in the office now in Europe, not 100% back to pre-COVID attendance, but most of the way there, actually. But also, yeah, I mean, in Australia, we've still got extremely low unemployment, but some parts of Europe, like Germany, for example, going into recession. The UK won't be too far behind, and a number of other countries. And it's changing that balance of power between employees and employers again. Australia, that hasn't happened yet. So look, and I guess in a sense, this is how wages growth is dampened and inflation gets back under control. Well, that is happening in Europe, and it might mean a recession to get through to there. So yeah, but the housing market is definitely buckling. Far fewer transactions, prices on the way back down finally, and yeah, but I guess a 5% base rate will do that. Australia, we've only got to 4.1 so far on the cash rate target, and we might have peaked, so we'll have to wait and see.
Yeah, absolutely. So yeah, any more? So the rest of the year, are you in Australia for the rest of the year, or are you planning on going back overseas?
I'll go to Europe for Christmas. I usually do that for family reasons, but yeah, certainly knocking around Australia for the foreseeable future. I've got a week in Melbourne, doing the Rask Roadshow in Sydney after that, and then I do actually have a bit of time up in Cairns coming up for a week. So always good to see what's happening in far north Queensland. Slightly different market, as you say. That's more tourism driven, more so than mining. So yeah, always traveling around a bit, and yeah, always keen to pass on any insights that I can.
And are you homeschooling the children? Is that kind of like what you're doing now with the traveling?
Depends who's asking. Yeah, it wasn't.
That's a bit naughty asking, but I'm genuinely interested as to.
Yeah, look, it wasn't necessarily what we were planning, but actually, like a lot of people through COVID, we basically got stuck overseas. We got spat out of the school system in Queensland, and so we ended up doing a year of schooling in Europe, which of course wasn't what we planned at all. But then since then, we've actually have been homeschooling over the past 6-12 months. Yeah, with varying degrees of success, but look, so far so good. Our kids are still junior school age, so high school's still 2 or 3 years away yet for us. So probably some bigger decisions to make at that point. But yeah, look, so far it's been good. Yeah, look, there's a lot of pros and cons in this debate about being in school full time or not. But you can do a project at the Great Barrier Reef. That's stuff you can't learn in a textbook. So it does have its upsides. But
I think it's got a lot of upsides. I think that I've never been a fan of formal education. I don't think that they necessarily give you the best education, even if you go to some of the great schools. And I'm talking as somebody that did spend a while as a teacher. I am a qualified teacher and did spend some time teaching in schools in Australia and in the UK. Yeah, the teaching system works to a very set curriculum, and it's all about you just pass that curriculum. It's not necessarily about broader learning and broader understanding. And yeah, it was an interesting experience. But at the end of that experience, I did kind of think to myself, if I ever had children, that homeschooling would be something that I would consider doing, because I feel that there's potential for a much better education and much more balanced kids at the end of it.
Well, it's a wider philosophical question, isn't it? Some of the people who've been most supportive of us homeschooling, one of my friends is a head teacher, and he said that he thought it was a fantastic idea, which I thought was counterintuitive for somebody who's a headmaster at a junior school down in Bega. But yeah, I guess you're a musician and a creative, so yeah, you can't teach that stuff necessarily on a set curriculum. And I think, quite often you get involved in this sort of wider debates. What's the purpose of schooling? Because a lot of people would say, well, you need good exam results, and then you sort of go on, but why? Oh, so they can go to a good university. But then it's like, well, but then you go along with this line of thinking. It's like, yeah, but what's the purpose of that? I suppose it really depends on the individual and what they want to do. So yeah, I'm open to see what happens on that front. But yeah, there's a lot of people like me who did general arts degrees who probably would have been better served out doing an apprenticeship or something more hands-on, maybe, instead of racking up student debt. But anyway, that's I guess a much broader debate. But at the moment, we've got 650,000 international students in the country, the highest ever. So yeah, clearly higher education is still very popular, especially with Asian students.
Yeah, well, with the Asian students, if you want to be a doctor or something, you have no choice but to go through that kind of formal education. But I interviewed Warren Ebbett a few months ago, and I think I can't remember whether I broached the question. It wasn't in terms of schooling, but I was talking to him, and he was saying, look, Catherine, the richest people in Australia, they didn't get a formal education. They basically learn to do business and learn when to put their investments, and actually that was how they became wealthy. So it's not something that you need in order to succeed. I think we know that from even people like Richard Branson, who didn't get where he is today through spending 7 years in university. And I'm talking from someone who I spent a considerable amount of time, many years studying. So yeah,
I was thinking it's something that Malcolm Gladwell has pointed out. I think it was his book Outliers. And sometimes people who are dyslexic, they're forced to go into business because traditional education is very difficult for them. And yeah, Branson would be a good example. I actually heard Glenn James from the My Millennial Money podcast speaking yesterday in Newcastle, and he sort of said, well, look, there's two places you can make serious bank, and that is businesses and bricks, and it is very true. I think Robert Kiyosaki said years ago, build businesses and buy real estate. There's a reason why those people are always on the rich list. So yeah, but as you know, you need to buy the right types of assets to get that snowball rolling.
Yeah, and talking about him, Kiyosaki, he's always an entertaining character, because I think every year over the past 2-3 years, I've tweeted out stuff where he's calling for like a major crash in the property market. And I was thinking, gosh, he needs to do a little bit of cycle research, because at some point he's going to be right. But yeah, I mean, it's like invest in real estate, and then every year he's sort of saying, well, there's going to be a major crash. And the last one that he was calling was to do with the Airbnb. He was saying that it's going to be led by Airbnbs, because there is this kind of theory that Airbnbs are crashing. But if you actually look at the stats, it's really, I think, just a topping out of what happened in the pandemic, where post the pandemic, you had this kind of rush for travel, and that kind of did Airbnbs a lot of good. And now everything's going back to normal, and the market's sort of just normalizing.
Very topical, actually, with Victoria introducing a 7.5% levy on short stay accommodation for rental income from landlords. So that's looks like a sector that's going to cop some heat from state governments over the next few years. Rightly or wrongly, it seems to be the push. I mean, it doesn't really fix the underlying issue, though, that we've got too many people coming into the country and not the capacity to build for them. So yes, you can introduce taxes on short stay accommodation, but it's really just moving deck chairs around. It doesn't get stuff built.
Yeah, absolutely. In fact, I've got a friend, he called me about this, because I'm president of Prosper Australia, and obviously we do a lot of work with policy changes and everything. And I always get these calls from people as if I'm somehow to blame for things that Dan Andrews does, which I promise you. And he runs 2 Airbnbs, but he runs them as very exclusive houses. So they're very fancy houses that he's done up inside, and he offers like a private chef business with it. So it's not like accommodation. It can be used as long-term accommodation, but it's not done up for long-term tenants. It's done up for like exclusive stays. And he said to me, look, I cannot stay in Victoria anymore. Like my land tax bill has gone up, and now they're talking about rent freezes. I know rent freezes have been kind of taken off the table, but the increase in taxes on short-term rentals. I mean, these these things, they're not necessarily thought through at a policy level to make, as you say, to make any fundamental changes in the property market of what we need in the property market or what we need generally, in tax reform in this country. And so we just it ends up not solving anything, but making it pretty difficult for people that are trying to make business here. And he's
not thought through would be an understatement. Queensland's just as bad, by the way. We have a brain fart about once every month on average, and some of those proposals that they don't make it through the first few weeks before they get canned, and then they're on to the next brainwave. But sometimes it's driven by what's politically popular as well, rather than actually what's going to fix issues. It's very popular in Queensland to for the state premier to post pictures of we've added 8 houses to the social housing stock, which is good and it's better than nothing. But there's a much bigger issue at play here, and that's running record population growth, and there's no plan really to provide affordable or social housing. So a few little bits and pieces around the margin, but they just don't move the needle. There's as you said, you need bigger macro ideas than that.
Absolutely. Yeah. Well, it was good. I'm glad our discussion went on a little bit. I think it's actually made a pretty interesting discussion. We've covered quite a bit here.
I didn't expect to be talking about homeschooling and being grilled on that today, so I didn't prepare accordingly, but it's nevertheless an interesting discussion.
Well, you should know, these things, if we don't discuss them in public, we discuss them in private, so we might as well bring the conversation and make it a little bit more juicy. But
that's right, the cafe on Ackland Street. You can come and eavesdrop on the podcast instead.
Yeah, we should probably meet there for a podcast and do it as record our conversation. That would be interesting.
Off the record,
yeah, there'd be a lot of stuff that would be off the record there. Okay, I'm so grateful as always for you, because it's always short notice where I fire these things at you, and it's always fantastic talking to you. And I look forward to when you're visiting us in Melbourne next week, and we will continue.
Pleasure. Thanks, Catherine. I look forward to grand final week in Melbourne, and hopefully a bit warmer than the 18 degrees you've had this week.
Yes, actually, it's been really nice. It's been really nice in Melbourne. It feels like summer at the moment. So hopefully it'll be a good week. Yeah. Okay. Thanks so much. We'll talk again soon.
Cheers. Thank you.